Hello guys, welcome to part 8 of True SMC from A to Z 2026 edition, and in today's video we'll be learning about the entry modules. And so without further ado, let's dive in. Alright, so in True SMC there are 4 entry modules, and that is the Inducement Sweep entry module, the Decisional POI Mitigation. By POI I mean either an order flow or an order block, so take note of that. And then we have the third entry module, that is the Engineering Liquidity Sweep, and the most sensitive one, or the highest probability one, that is the Extreme POI Mitigation. So these here are the 4 entry modules in True SMC. And so without wasting any time, let's get to the first one, that is Inducement Sweep entry module. Okay, so we can clearly see that price has taken out this sell side liquidity and made that reversal, of course, making a break past this swing point high. So we all know that will be, of course, a break of structure. Price takes out the major inducement exactly right there, mitigates the extreme order block, and again reverses back and makes a break past this swing point high. So that's, of course, a bullish break of structure, and this creates, or this leaves us with a dealing range, of course, ranging from that low all the way to that high. Okay, so let me do this cleanly or neatly. We can clearly see exactly right here that price has taken out this major inducement. So this is what we call the major inducement, and price reversed back, making a break past this swing point high. So what does this mean? That is a bullish break of structure. Again, we can clearly see price created this inducement, reversed back, took out that major inducement, and then clearly see that price mitigated this extreme order block before making that ultimate reversal all the way towards this external high above here, and this is what we call a bullish break of structure. Okay, so this leaves us with a new trading range, of course, ranging from this low all the way to that high. Okay, and that's where now we will be doing our, of course, marking the POIs and marking the inducement. And we can clearly see that this one here is the external high. And if I am to mark the inducement, we can clearly see that this one here is our minor inducement. And of course, if that's the minor inducement, then our external low will be the major inducement. Okay, so this one here is our minor inducement, and of course our major inducement is our external low. Alright, so let me run price. As we usually know, we don't buy before the inducement, because any POI, that is order flow or order block, before the inducement is what we call an SMT. So it's either price takes out the minor inducement before the buy, or goes on towards the major inducement takeout before the buy. Okay, price has mitigated the SMT exactly right there, and we can clearly see it is also the order block prior to the break of structure. So someone else would confuse this one here with the decisional order block, but in this case it is before the inducement. So what does that mean? It means that it is an inducement trap, and you should not take any buying position from there. Okay, so let me continue running price. We can clearly see price is heading down, and exactly right there we can clearly see price has taken out the minor inducement. The major inducement is still there, intact and clear, and we can clearly see that reversal pattern there, a very strong reversal pattern exactly right there. That is after this bullish engulfing. We can clearly see this bullish momentum candle, and in this case this here is of course a valid entry. Of course, their stop loss, you can set it a few pips below there. You can set it at this external low, or even better, some few pips below the major inducement, because price can fail this minor inducement sweep and go on towards the major inducement sweep. However, by doing that, you will get a very small RR, and I think it will be better you just set the stop loss there, as a minor inducement sweep is also valid. Okay, so do that, and of course we'll be targeting the external high, and a 1:2 for me is a good risk to reward. Okay, so exactly right there, that's our entry, and now let me run price and see the fate of our trade. Okay, Okay, so you can clearly see exactly right there, price is heading onto our favor, and eventually price made it to the external liquidity. And we know a break past the external high, it makes a break of structure. Okay, so that is the inducement strip entry module. And now let's get to the second entry module, and that is the decisional POI mitigation. Okay, so exactly right here, we can clearly see that we are bearish, confirmed by price taking out the major inducement exactly right there, additional buy side liquidity, and eventually reversing back and making a break past our external low. I mean, this one here, the previous external low, and that creates a bearish break of structure. This creates, of course, a new trading range ranging from that high all the way to this low. Okay, so now we have our trading range, and so what's next? Marking the inducement. Okay, so let me do this, remove this also, and we can clearly see that our major inducement is none other than this one here. So this one here creates our major inducement. So let me do that. That's our major inducement. This one is already an external low as price has already taken out the major inducement. This one here was our break of structure. I mean our previous break of structure. So if I am to mark the swing points, we can clearly see that this one here is the lower low that price made a break. And this one here is, of course, our higher high. And this one here will make our lower low, our current lower low, that is. Okay, so right now, price has taken out the major inducement. What's next? Of course, marking the POIs. I'll be starting with the order flows as usual. As I said, that starting with the order flows, it will be easier for you to mark the order blocks. Okay, so right there we have our extreme order flow, and in that case it's valid, not mitigated. As you can clearly see, this here didn't mitigate this order flow, and we can clearly see the other order flow, or the order flow that follows. It's this one here, and the same, it's not mitigated. So in this case, this here is a very simple trading range. The order flows and the order blocks are clearly seen, as we can clearly see that this one here is our extreme order block in that case, because the extreme order block needs to be located inside our extreme order flow. So that makes our extreme bearish order block, and of course this one here makes the decisional order block exactly right there. So this one here is the decisional bearish order block. And so where is the engineering liquidity? We know the engineering liquidity is the buy side liquidity, as in this case it is a bearish scenario. Of course, it will be the buy side liquidity right before the extreme order flow. And in that case, that makes us the engineering liquidity. So our trading range is fully marked. Now let me run price and see where price is reversing from. Okay, so right there we can clearly see price is heading higher, and okay, so price has mitigated that decisional order flow, and we can clearly see this clear rejection after mitigation of the decisional order flow. Price gave this clear bearish rejection. Price has yet mitigated the decisional order block, but we can clearly see the reaction is from the decisional order flow. Like I said on the entry modules, I said decisional POI mitigation. I didn't specify which POI. I didn't say it is an order flow or an order block. So what does that mean? Any can work. Order flow or order block, any can work. And in this case, we can clearly see it's from the decisional order flow. I mean that good reaction is after price has mitigated that decisional order flow. And if I am to measure the retracement here, we can clearly see that price made it to the 50% of our dealing range exactly right there. So this gives me an extra confirmation knowing that price has made it to the premium of our dealing range. So that gives me an extra confidence. So right there, we can clearly see that selling displacement, very good selling momentum to take that sell. Of course, your SL will be somewhere there and will be targeting the external low, but you can clearly see this will give you to me, a 1 point something is not a favorable risk to reward. So I would, in this case, extend it for 1:2 if I was to take this entry. And yep, exactly right there. You can clearly see a 1:2 will be somewhere there. And if I am to run price, and by the way, the decisional can fail. Yeah, price can fail the decisional, come towards the decisional order block. The decisional order block also can fail. So just know that the higher probability POI is the extreme order block, because if this fails, then price is looking forward to change bias. Anyway, we can clearly see the good reaction from the decisional order flow. So yeah, you can clearly see exactly right there. Price is okay. So let me make it fast. And price consolidated a little bit there, but eventually you can clearly see it's heading onto our favor. And in no time, price made it out to the full TP. So this is the second entry module, and that is the decisional POI mitigation. Just know that sometimes price can fail the decisional order flow, and in that case, then you will be using the decisional order block if that is, you see a reaction from it, a clear directional shift signaled by a strong reversal pattern. Okay, so let's get to the third entry module, and that is the engineering liquidity sweep. Okay, so exactly right here, we can clearly see that we are in an uptrend as price has been making break of structures to the upside, exactly right there. And this one here is our current break of structure. Price has taken out the major inducement. So this signals a strong break of structure. And also, if I am to measure this retracement, we can clearly see that this retracement can clearly see it made it to the 50% of the previous dealing range. So this means that we have just acquired a good dealing range here, exactly right there. And yeah, so what's next? Marking the inducement, as we have our swing points. So let me mark our swing points just in case. So this is a bull swing point. Okay, so that's there, our high. And of course, this one here is our higher low. Okay, our break of structure is exactly right there. So let me use a clear trend line so that we get to see where price broke. And we can clearly see exactly right there. Okay, so that's our bullish break of structure. And now let's mark the inducement. And we can clearly see that this one here was the major inducement, and price has already taken that out exactly right there. So what does this mean? It's time to mark the POIs. And if I am to mark the POIs, then I can clearly see that all the order flows in this case are mitigated. You can clearly see that all of this corrective leg was the order flow, and it was mitigated exactly right there. So the next one was this one, and it was mitigated by that pullback that created our inducement. So this means there is no any valid order flows in our case here, and in that case then we'll be shifting to the order blocks. Okay, so right here we can clearly see that the extreme order block was mitigated, and this one here makes the extreme order block. So that makes the extreme order block extreme bullish order block. And of course, this one here is the sell side liquidity right before the extreme order block. So what do we call this? We call this engineering liquidity. So that's the engineering liquidity. And if I am to mark the decision order block, it's of course this order block before the break of structure, exactly right there. And it's kinda like it was mitigated, or I don't know, maybe there is some narrow fair value gap there or imbalance. So in that case, that makes the decisional order block. And you can clearly see price gave that reaction, but then later failed the decisional order block. And now price is heading towards the engineering liquidity, maybe ultimately mitigating the extreme order block. So let me continue running price and see what price does. Okay, so exactly right here, we can clearly see price has taken out the engineering liquidity here, and price is giving that reaction. We can clearly see that clear bullish momentum onto our favor, so that gives me an extra confidence to take the entry. Of course, stop loss some few pips beyond that reversal pattern, and of course I'll be targeting the external high exactly right there. So this gives me 2.7. Okay, so just know that also the engineering liquidity can fail, and if it fails, then you'll be looking forward to buy on or upon mitigation of the extreme order block. Okay, so if I continue running price, we can clearly see that price is heading onto our favor, and ultimately price, yep, exactly right there. Okay, price is, yeah, you can clearly see ultimately price made it to the external liquidity exactly right there after the sweep of the engineering liquidity. So that makes the third entry module. And now let's get to the highest probability one, that is the extreme POI mitigation. Okay, and we can clearly see that we are in a downtrend actually, because we can clearly see that price has taken out this inducement, another sell side liquidity below here, then you can clearly see it reversed back and made a break past that high. So what does that mean? This means that that is a break of structure, I mean a bullish break of structure. And okay, so we can clearly see minor inducement. So this low here is our major inducement, and we can clearly see price took that major inducement. It was actually a sweep. So in this case, of course, this here is a valid entry module, the first entry module, that is the major inducement sweep, or I mean that is the inducement sweep entry module. And upon that morning star pattern being created, of course you can take your buy and of course target that external high, and you can clearly see price made it to that high, pretty clear there. That is 1:3, such a good trade. And of course this here will make a break of structure, and we can clearly see that price headed lower after that and created a change of character. So this means that we are back to bearish, and this one here is our high. Of course, this one here is our low. Okay, so now let me do this, and let me get rid of this one. Okay, so we can clearly see that our change of character was exactly right here. So let me mark it clear. So this one here was our change of character, exactly right there, I mean coach. And of course our swing point high, or our high, is that one there. And of course our low, that is after the change of character, it's this one here. So that creates the BS swing point. Okay, so price has already taken out the major inducement, as you can clearly see right there. Actually, it's not this one, it's this one here below. If I am to zoom here so that you guys can clearly see, that this one here was the major inducement, exactly right there. Yeah, you can clearly see this one here. That was the major inducement. Okay, so exactly right there we have the major inducement being taken out, and we can clearly see this one here is the decisional order flow. Why am I saying that is the decisional order flow? As we can clearly see that it is the opposing move before that selling displacement that heads over to the break of structure. You can clearly see that this one here is the opposing move before this selling displacement that continues all the way towards the break of this external low. So what does this mean? This means that this one is the decisional order flow. Okay, so that was easy to identify. Of course, the decisional order flow is very easy to identify. Now let's identify the extreme order flow. Okay, so this here is the decisional order flow, a valid order flow. And yeah, so let's start from the top for the extreme, and you can clearly see that this one here is mitigated. So that makes so this makes a weak order flow. Yeah, a weak order flow, or in that case, an invalid order flow, actually not weak, invalid order flow. And the one that follows, it's this one here, and we can clearly see this order flow is not mitigated. So what does that mean? This means that this one here is now the extreme, not OB actually, order flow. So it's actually our valid order flow. In this case, extreme valid order flow. And of course, the sell side liquidity right before the extreme order flow, it's this one here, exactly this one here. And of course, that makes the engineering liquidity. Okay, so now let's mark the order blocks. Of course, it will be easy now since we have the decisional and extreme order flow. So this is of course our extreme order block, exactly right there, extreme bearish order block. And this one here is what we call the, okay, so it is this one. Yeah, this is what we call the decisional order block, exactly right there. So that makes the decisional bearish order block. And of course, there is another order block at the top here. Even though its order flow was mitigated, this order block is still not mitigated. And that makes what we call the origin order block. Yep, so we have 3 order blocks, of course 2 order flows, and of course you can clearly see that the engineering liquidity sweep failed. You can clearly see the reaction there, but then failed. As well, the decisional POI also failed. Just a small reaction there, but price eventually headed higher. Price came for the engineering liquidity, gave this nice reaction. This would have been a great entry. Of course, their stop loss above that high, and of course, targeting that external low, probably extend it for 1:2. And you can clearly see price headed towards the SL, and that happens. I mean, it happens. So, yeah, you can clearly see price has now mitigated the extreme order flow. So now let's see what price does from here. So let me make price low, and if I am to run price, we can clearly see, okay, that those 2 pin bars. So now I'm waiting for a bearish candle towards the bearish side. I mean a bearish momentum candle. Actually, price has mitigated the extreme order block. You can clearly see that. Okay, so let me continue running price, and price has mitigated even deeper into the extreme order block, and that's when now it gave that clear bearish candle into our favor. And so of course above there, or even better above that high, but just place it there, and of course target this external low. That would give you a 1:2. Yeah, that is actually the side effects of using a direct entry or just entering based on the same time frame. You can actually use lower time frame execution, whereby you refine the entry on the lower time frame, and that will give you an insane risk to reward, probably a 1:4, 5 ongoing higher. Yeah, so anyway, worry less, because we'll be diving on that. We'll be having a part on its own, diving into multi-time frame analysis. But in this case, this is just a direct entry based on the same time frame, actually any time frame. Okay, so if I am to continue running price, we can clearly see that price is going onto our favor, exactly right there. And I know in due time, and I know in no time, price will make it to the external liquidity. And exactly right there, price made it to the external liquidity. Yep. And that is, guys, we have covered the 4 entry modules on True SMC, and the extreme POI mitigation is the high probability one. So keep note of that. This means that the decisional POI can fail, the engineering liquidity sweep can fail, but if the extreme OB fails, I mean specifically the extreme OB fails, okay, that is if there is no the origin order block, because if the extreme OB fail, in this case we'll be looking forward for the origin order block, because now that will be the highest probability in that case. But in this case, since the extreme OB is available, this extreme OB is the highest probability. If the extreme OB now fails, we'll be looking for the origin OB, but in most cases the origin OB is not there. So yeah, those are the 4 entry modules, and if you made it to this end, I know you enjoyed the video and of course learned something new. So do me a favor, drop a like, and I will see you in the next video.